Have you ever wondered what Bitcoin halving is and how it affects the price of Bitcoin? Welcome to our deep dive into the fascinating world of Bitcoin and one of its most intriguing aspects, Bitcoin halving. At its core, Bitcoin is a type of digital currency created and managed electronically. It's not controlled by any government or financial institution. Instead, it's produced by people, or rather by computers around the world, using free software and held electronically in programs called wallets. Now, you might have heard about Bitcoin mining, the process through which new Bitcoins are created. It's a crucial part of the Bitcoin ecosystem. And in this process, there's a unique phenomenon that occurs approximately every 4 years, known as Bitcoin halving. But what exactly does this mean? How does it work? And most importantly, how does it impact the price of Bitcoin? Stay tuned as we dive deep into this intriguing concept of Bitcoin halving. To understand Bitcoin halving, we first need to understand what Bitcoin mining is. Let's dive in, shall we? Bitcoin mining is essentially the process of creating new Bitcoins. This is done by miners who use powerful computers to solve complex mathematical problems. Once a problem is solved, a new block of transactions is added to the Bitcoin blockchain. As a reward for their efforts, miners receive a certain number of Bitcoins. This is known as the block reward. Now, the block reward is a significant incentive for miners to keep mining. It's like a gold rush, with the miners being the prospectors and the block reward being the gold. But just as the amount of gold in a gold mine isn't infinite, the number of Bitcoins that can be mined is also limited. There are only 21 million Bitcoins that can ever exist. This is where Bitcoin halving comes into play. Bitcoin halving is a process that occurs approximately every 4 years, or after 210,000 blocks have been mined. When a Bitcoin halving event takes place, the block reward that miners receive for solving the mathematical problems and adding new blocks to the blockchain is halved. This means that if the block reward before a halving event was 12.5 Bitcoins, after the halving event, it would drop to 6.25 Bitcoins. Imagine being a gold prospector and suddenly the amount of gold you get for your efforts is halved. That's essentially what happens to Bitcoin miners during a halving event. The purpose of Bitcoin halving is to control the supply of Bitcoins and prevent inflation. With halving, the creation of new Bitcoins slows down, making Bitcoins more scarce. And as we know from Economics 101, when something becomes more scarce, it typically becomes more valuable. So, in essence, Bitcoin halving is a process where the reward for mining new blocks is halved. It's a crucial mechanism in the Bitcoin network that helps regulate the supply and value of Bitcoins. Now that we know what Bitcoin halving is, let's explore how it actually works. Bitcoin halving is essentially a pre-programmed event in the Bitcoin code, designed to control the supply of new Bitcoins entering the market. It works on a simple principle. Every 210,000 blocks added to the blockchain, the reward for mining a new block is halved. This event plays out approximately every 4 years. You see, every 10 minutes or so, a new block is added to the Bitcoin blockchain. If you do the math, that's about 144 blocks a day, or 52,560 blocks a year. So roughly every 4 years, we hit that magic number of 210,000 blocks, and the halving takes place. Now, let's take a walk down memory lane. The first Bitcoin halving event occurred in November of 2012. Back then, the reward for mining a new block was 50 Bitcoins. Post-halving, it was reduced to 25. The second halving in July of 2016 saw the reward drop from 25 to 12.5 Bitcoins. The most recent halving, in May of 2020, slashed the reward to 6.25 Bitcoins. But why does this happen? Well, Bitcoin's mysterious creator, Satoshi Nakamoto, designed Bitcoin to mimic gold in a way. Just like gold, Bitcoin has a finite supply, 21 million coins to be exact. The halving mechanism ensures that the last Bitcoin won't be mined until about the year 2140. This elegant system is at the heart of Bitcoin's economic model. It creates a predictable and decreasing supply, ensuring that Bitcoin retains its value over time. It's a stark contrast to traditional fiat currencies, which can be printed at will, leading to inflation. And that, my friends, is the mechanism behind Bitcoin halving. We've understood the mechanism of Bitcoin halving, but what does it mean for the price of Bitcoin? Bitcoin halving is a landmark event in the crypto world, but its implications extend beyond just the technical aspects. It has a profound impact on the price of Bitcoin, which can be explained through the basic economic principle of supply and demand. This principle states that when the supply of a commodity decreases while its demand remains the same or increases, the price of that commodity goes up. And this is exactly what happens in the case of Bitcoin. When Bitcoin halving occurs, the reward for mining new blocks is reduced by half. This effectively cuts the rate at which new Bitcoins are generated or supplied to the market. However, the demand for Bitcoin, driven by its growing popularity and acceptance, tends to either remain constant or increase. This imbalance between decreasing supply and steady or increasing demand creates a scarcity of Bitcoin. And scarcity, as we know, drives up the price. It's a bit like gold. The rarer it is, the more valuable it becomes. That's the theory. But does it hold true in practice? Historical data says yes. Let's take a quick look back at the past Bitcoin halving events. The first Bitcoin halving occurred in November 2012. Prior to this event, the price of Bitcoin was around $12. Following the halving, the price surged and reached a peak of approximately $1,150 in November 2013. The second Bitcoin halving took place in July 2016. Again, the price of Bitcoin experienced a significant increase, peaking at nearly $20,000 in December 2017. The third Bitcoin halving happened in May 2020. The price of Bitcoin was around $8,500 prior to the halving. As of now, it has crossed the $50,000 mark. These instances clearly demonstrate a trend. Each halving event has been followed by a significant surge in the price of Bitcoin. Therefore, Bitcoin halving has historically led to a surge in the price of Bitcoin. Let's take a look at the past Bitcoin halving events and their impact on Bitcoin price. In the world of Bitcoin, there have been three major halving events since its inception. The first one took place in November 2012, the second one in July 2016, and the most recent one in May 2020. Each of these halving events has left a distinctive mark on Bitcoin's price history. In November 2012, the first halving event occurred. At that time, the Bitcoin block reward dropped from 50 to 25 Bitcoins. In the months following this event, there was a significant surge in the price of Bitcoin. From a mere $12 before the halving, Bitcoin's price skyrocketed to over $1,000 by November 2013. Fast forward to July 2016, the second Bitcoin halving took place, reducing the block reward from 25 to 12.5 Bitcoins. Again, the impact on Bitcoin's price was significant. Although the immediate effect was not as dramatic, the price of Bitcoin started a steady climb after the halving, reaching a historic high of almost $20,000 by December 2017. The third halving event in May 2020 saw the block reward reduced further to 6.25 Bitcoins. This time, the price of Bitcoin, which was hovering around $8,000 before the halving, surged to over $60,000 a year later in April 2021. However, it's crucial to remember that while these price surges followed each halving event, they didn't happen immediately. The price increases were gradual, unfolding over months or even a year, suggesting that the market takes some time to adjust to the reduced supply of new Bitcoins. Also, it's worth noting that various other factors, such as market demand, global economic conditions, and regulatory news, can also influence Bitcoin's price. As we can see, each Bitcoin halving event has had a significant impact on the price of Bitcoin. We've explored the concept of Bitcoin halving and its impact on the price of Bitcoin. We've unpacked the mechanism behind this event, delving into the technical aspects of how it works. We've seen how Bitcoin halving has historically influenced the price of Bitcoin, looked at past halving events, and examined the trends that followed. This unique occurrence is a fundamental element of Bitcoin's design, intended to control inflation and maintain the cryptocurrency's value over time. It's a fascinating aspect of the Bitcoin universe, contributing to its intrigue and its volatile nature. The significance of Bitcoin halving extends beyond just price impact. It's a testament to the innovative approach to decentralized currency, and a reminder of the scarcity principle that underpins its value. And remember, though history tends to repeat itself, past performance is not always indicative of future results. Keep this in mind as you navigate the exciting world of Bitcoin.